This last week, I was asked a question about what is the difference between a joint venture and a partnership. And I've talked about it very briefly in a previous video where I've simply given the distinction between different entities, trading entities. So today, I'm going to talk more about the specific differences between a partnership and a joint venture. Now, a partnership is different in the sense that you would need to draw up a partnership agreement, and the different parties to that agreement are usually individuals. They would sign and they would decide how they are sharing the profits. This is usually an ongoing venture. For instance, we see the big accounting firms. Those are big partnerships. Then we can see, sometimes I've come across in practice, just two people coming together and bringing their skills in order to partner together to run a business. Now, with a partnership, what would then happen is you would share at whatever rate, usually 50-50. Sometimes there's more than two partners, right? You would share your profits and you would then be able to submit your tax returns in your personal capacity as the partner based on what you've earned from the partnership at the end of the year. So you declare whether you made a profit or a loss. If it's a loss, you carry it forward to the next year. If it's a profit, it's usually distributed and shared equally, unless if you decide to actually keep the profits in the partnership. As you file your tax return, you will actually find that question being asked if you're a sole proprietor to say, are you in a partnership or are you just filing as an individual? So you would need to tick the relevant box. The other thing about partnerships is that it's usually, as I said, a drawn-up agreement, and you may or may not decide the end of the partnership. With the joint venture, the main difference here is it can be between companies, and it's usually for a specific purpose. So you're coming together in order to either, in most instances, maybe you're applying for a project and you need a BEE partner. You may not have a high level of BEE, so you come together with another partner, form a joint venture, which is usually very temporary for the specific purpose of a project. You do the project, and when the project is finished, you just separate, distribute your profits. You do not specifically file that on your tax return or disclose that, the fact that you are in a joint venture. However, you still need a joint venture agreement, which will work in pretty much the same way as a partnership. Each party will tabulate what they're bringing to the joint venture and how they intend to distribute the profits. That is the main essential difference between a joint venture and a partnership. Very similar. The other thing that you need to also be cognizant of is usually there's a partnership bank account that can be opened, but within joint ventures, you may decide to just open just a separate bank account where you will pool your funds, or you may decide only one of you will get the funds and be honest enough to share the profits equally. So partnership are more formal, they are more common in practice. They are, I would say, more prescribed. If someone were to ask me, should I enter into a joint venture or partnership? I would tell them joint venture if it's for a specific short-term venture, but if it's going forward, partnership. However, just be careful. Your taxes would be taxed at a much higher rate. You would be incurring much higher tax than you would if you were to register a company and just have 2 directors or 3 directors. Also, you'd be treated as a sole proprietor when you're filing your tax return, which has its many disadvantages. Join me as I discuss these and many other topics on my channel.